Presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, my good friends. As we start the day off, we're up 45 points on the S&P cash. That's at 1985 and change, 2.86 billion shares. So volume's starting to tick down a little bit as volatility, as they say it has picked up, but you know, we've got kind of the short squeeze that I was looking for yesterday, and we talked a little bit about how I've come to look at markets like this, but I remember the dot-com days vividly. We talked a little bit about it yesterday, and even after the stocks got absolutely creamed right at the beginning of 2000, mostly because a change in the way that you paid taxes on those. The tax was so much less on January 3rd of 2000 than it was on the day before the market closed in 1999, that everybody hung onto their stocks, and everybody came in and started selling on that. I'm pretty sure it was a January 3rd. I kind of vaguely remember it being so beautiful, and also seeing Qualcomm go from 195 bucks or so down to 140, 135 bucks. It's split since then, but there were a lot of stocks that had just gone to the moon. No one in the world was going to sell them. And of course, everybody got incredibly bearish. And guess what? The market held up and continued to go up, not back up to the highs, but continued to do very well, almost until March, where it actually let go. So you had about 3 good months, maybe a little more than that. And it was very, very interesting. But I wrote in the newsletter this morning. At that time, I was around TFNN and listened to Tom in the afternoon. I think it was 2 hours on the radio. There was no dialing in at the time or anything else. I think that came maybe in 2001. Maybe he was doing it. I just didn't know it. Anyway, lived about a mile from the office at the time, so I would stop by there once in a while and talk to him. But it was very interesting because during the day I was in a chat room, and at that time there would be thousands, if not 5,000 and 10,000 traders in a variety of these chat rooms. And they tended to act very much like wolf packs. That is, that one person would get an idea and everybody would hop on it. So everybody would start shorting a stock, and or everybody would start buying a stock because of what some individual in the den that in the chat room supposedly had as inside information. There were a couple of people that actually ran the show, and I thought they front ran the stocks quite a bit on their picks. And, you know, if everybody follows you, you become kind of a self-fulfilling prophecy. But what I did notice is that there was some stock, and I can't even remember the name of it now. And I think it wasn't even a well-known stock at the time, other than in day trading circles. But it went from like 400 bucks to like 100 bucks or 110 bucks or something over the right after the beginning of that year. And then I saw it like go between, I don't know, maybe 100 bucks and 190 bucks in less than a day, or maybe it was 2 days. All I remember is that the thing went up 10 bucks and everybody in the room shorted it. It went up 10 bucks and everybody covered. It went back down 5 bucks and everybody shorted it. It went back up another 10 bucks and everybody covered again. And that kind of almost was just a kind of a ratchet of giving away absolutely mountains of cash that all these people had made before in the last year and a half of the dot-com revolution. They couldn't give it away fast enough for this particular stock. In fact, I think it wiped out half the room. I wasn't playing it because it was moving way too fast. I remember I had just installed a ISDN line and had one of the fastest internet connections at the time, but it still wasn't, 100%. It could go out at any time, and I had to make sure that I had a phone and a cell phone and a bunch of other things for backups for my backups. In fact, actually, I had two different internet companies into the house, and I had a router that would automatically switch between both of them, depending on load and whether or not there was anything happening. So I had an ISDN line, and then I had a regular internet connection to the house. But the thing that happened between that period and when the market actually the wheels did fall off the wagon in March, was I saw so many of these people that saw the break in the market, and they just thought that the market was going to go straight down. Well, even then, with stocks that were totally worthless, and I mean these stocks never made a dime, never were going to make a dime. We don't have that many stocks out here today that are complete frauds. So I'm not as bearish as I was in 2000. But markets go up and markets go down, and markets go up in bear markets, and they go down in bull markets. And just don't get too married to any one position. We went long several stocks. I found one in the Tech Insider that took off like a rocket. We also had a very good one yesterday in the energy sector. In the daily trading newsletter, it's up almost 13% today on a one-day trade. So I kind of really thinking that we got kind of the tiger by the tail, like they say. It will not last forever. There is a good chance, or at least a chance, that we come back and retest these lows. But much like 2000, I suspect that this is the first shot across the bow if we are in a continuous bear market. And it's going to be very tough, especially as we get back into September. The PR engine's going to be back up. One of the best tricks that Wall Street has ever played is, of course, bringing stocks down a peg and then selling them out. If you read Jesse Livermore's works of the 1920s, he supposedly was the biggest operator there ever was. He said that you could not sell stocks and distribute stocks in any meaningful way if the stock was, questionable on the way up. The only way you could sell was on the way down. The idea was to get it up as absolutely as high as you could, let it break, and then on the way back up, other people would want to step in thinking that they were going to get a deal. In fact, people would do that all the way down to the point that these stocks went bankrupt, and that's pretty much what happened for a great deal in the dot-com days of 2000, 2001, all the way to 2003. Of course, most of the stocks that were completely worthless didn't even make it into 2002. They were bankrupt by 2001. Some of them didn't even make it into the summertime, like Pets.com. There were some other very famous ones that blew up in a matter of minutes. But just know that stocks go up, stocks go down. Do not get married to a position, and don't be too much of a cheerleader either on the way up or the way down. Just some humble thoughts. Hello, we were expecting this fall come early. I was only looking for 1900 on the way down. So Danny in the Den is asking, could this be the low I was expecting in the fall? Well, I was looking for 1900, or actually, 1990, excuse me, before this all blew apart. So, significantly under that. So I would say that we are in a lower trading range at best. What's the fork? Don't know. Anyway, what else do we have? So I don't know. There's a lot of stuff going on out here. The big problem I see in the markets is that about 30% of all profits revolve around artificially low interest rates. Forget everything about the dollar. Forget everything about China going up and down. We are in a market that has no true price discovery. That is, everything is a mirage until we find out what really happens when interest rates are allowed to assume room temperature. And at this point, we are trading a market that is gamed at least somewhat by the Fed. And of course, I don't think it's any big surprise that we're seeing and going into Jackson Hole this week with a market that seems to have repaired, at least gotten rid of the biggest amount of fear right now. We're also going into the time frame in which Apple is going to get its PR engine up and running. In fact, it's up and running fairly strongly today, up another almost $3, $2.78. Of course, going into the 9th of September, it's going to release its next product. They also have some rumors of products that maybe we'll get to today. Maybe we won't. We got a lot of other stocks to look at today. 1892 on the S&P cash. We're up 41 points. We were at a high of 1989. I suspect that we're probably in some kind of trading range for a while, because this is where major resistance will be. Actually, I put it in my newsletter this morning. 1970 to 1990 is where this will come in. So we're probably going to kind of back and forth here, little consolidation. But it's going to be much tougher to figure out. Now, the problem is that, and this is where you don't want to get into this trap, is that a lot of people are going to have shorted that 1985, 1990 range. They would have seen the same thing I had. And unless this market continues down for the rest of the day, we're going to probably see some kind of push toward the end of the day, just like we saw yesterday. There is very little evidence to say there are a lot of people that have stops below, because guess what? Those people bought 50 points below, and their stops are probably down there. This market would probably have to go to something like 1920, 1915 to actually start running stops again to the downside. Now, on the contrary, stops probably up at that 1885. My thought would be that even if you were bearish, you would need to get that up to the 1985 and run all those stops, maybe 1990, and then see the market turn yet again down. So I can't see a lot of profit and risk reward anywhere other than if you're long, letting this go, and if you're wanting to short, waiting for a better opportunity. We're turning in at 3 billion shares at the New York Stock Exchange consolidated tape. That is every share that's traded that was listed on the New York Stock Exchange, just not ones that traded on the floor through the New York Stock Exchange itself. And, of course, the Amex and everything that isn't in the NASDAQ, let's put it that way. And everything that is traded, whether it's traded on an ETN or an ECN or traded out on the middle of the street. Anyway, we'll be back in a minute. We'll get into some history on this day. We'll get into, I got a lot of stocks listed on my notebook here. We'll get into these, and we'll talk about a few other things in the news and some earnings. Got lots of stuff to do today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Wanted to lighten a little bit more about the question that we had in the den. Could this low have come early? I think probably a better question is, if we're going to get a pullback, when is it going to come? And my guess is that now, with light volume into the summer, with a washout behind us, most likely if you wanted a short, I would probably, and I'm talking if you're not watching 5-minute charts, I think that there is no big money to be made shorting, and that means more than being short for 30 minutes or an hour or even half a day, until probably after we come back from our 3-day weekend. At that point, Apple's going to come back. That could give us a break for a day or two. At that point, could we get a decent pullback? I think maybe, but what I'm looking at now suggests that there probably isn't a lot of cash to be made to the downside. As they like to say on the street, buy the dips and sell the rips. But we're off 11 points off the highs, but still up almost 40 points on the S&P cash. A lot of ticks, but not a lot of action. 3 billion shares, so volume is still coming in. My guess, as I said, is you get to the last 30 minutes of today, and we see the market still around this 1980 level. We're probably going to close at 1990 or 1995. Just too many people are going to be thinking that the market gaps up again on them tomorrow. And wouldn't be surprised. A lot of people will short this all the way up, just like they did in my story from 2000. And I think I've talked to Steve Rhodes about it at some length, but I did some studies, and the market's going up 75% of the time. Even in bear markets, it's going up 75% of the time. You have to be very much a sniper. You can't be running around with a shotgun in a bear market. You have to be fairly focused and pick your targets, and one shot, one kill, not spray and pray your trades around. How did you like that? Got enough mixed metaphors in there to win the award once again this year. As always, we like to start off the show, even if I get to the second segment before I start off the show, with a little bit of history.
Then it's all just a little bit of history repeating.
Anyway, on this day in 1878, after he returns to his laboratory in Menlo Park, New Jersey, from a trip to St. Louis, Thomas Edison begins experimenting with the electric light. By the middle of September, the final date is uncertain. Edison has solved the problem of creating incandescent light. He's done it by using a filament of tungsten wound around toothpicks, and getting that mixture right of tungsten, which was almost unknown of at that time. No one used it for anything else. No one knew a good reason to have it. Ooh, a nice little $5 down chunk at 1973 now on the S&P cash. 1972. We're really getting into this out here. We'll see. Anyway, 5 minutes does not make a market or a day. Anyway, very interesting. Of course, he made a few things, the phonograph. After that, he was more than willing, and didn't have a lot of new ideas, more than willing to steal everybody else's ideas and put them under his name. He was more than willing, probably one of the first really good PR men for his own PR, made up a lot of stories that only came to light after his death about how he did things. But he was kind of the Kardashian of their times, was able, they did nothing to be famous. He actually did something. But after he became famous and after he no longer had any ideas of his own, he was more than willing to be the media jackass, although his stories always painted him in a great light. But he was always out there hogging the stage from a lot of other people, mostly people like Tesla and others that did it very well. Anyway, nice little route out here to 1971 on the S&P cash. Other things of interest today, yesterday after the bell, a report from the Inspector Generals came out. We've been talking about it for a while, and just my general thoughts that solar companies are probably looking to go bankrupt late next year into 2016. The reason why is they heavily depend on government subsidies, and my guess is they get none. The report came out, basically shows everything that we already knew about Solyndra and a bunch of these other companies, and that was that they were slush funds at best. They were liars at worst. But that doesn't mean that you're probably going to find the current Congress, which has a huge majority in one house, deciding that they want to throw a lot of cash that's going to come its way and find its way back into the opposition. So I am thinking solar stocks continue to look very negative. Back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Oh, boy, look at that dollar. Up 63 cents at 95.73. After the false breakdown below $93.30, it didn't spend even a day below that. It popped right back into the trading range, now back up to the other side. What we're going to see probably in the next day or two is this thing go through 96.30, and that will tell us a great deal more about this market, at least the dollar, and how it's moving. After the bell tonight, we see Aerospatiale, Autodesk, GameStop, which is 50% short, so the thing's really going to have to miss. Smith & Wesson, which is very interesting to me because a lot of the articles over the last few days are talking about how Walmart has a glut of guns and is going to quit selling some of them. I suspect that's probably already in the stock price of Smith & Wesson, but we'll see how bad it actually is. Of course, the drumbeat of taking guns away has made everybody buy 10 times more than them. The current administration thinks that the best way to limit them is actually go after the ammunition. They've tried several ways there, but they may have created the biggest gun bubble ever. I'm watching Smith & Wesson after the bell tonight. Splunk, of course, the data mining company, Ultrasalon, which was a rocket for a while, and V-Memory, Violin Memory, after the bell tonight. So keep an eye on them. And it is a mad market. But we will continue and persevere. Other things on my list out here, of course, we talked about SCCO in the show yesterday. And I mean, talk about a beautiful test of the lows. It did everything we say. In fact, one of the terminologies in price and volume trading is called proving the point. What we see back here is the January 14th low at 2360. We talked about that. 8.2 million shares being tested just a few days ago by 5.7 million shares. We're starting to talk about that. We saw a lot of the Chinese stocks that looked like maybe they'd even bottomed. So there was a lot of evidence out there that made me think things were good, were probably at a bounce point. Now, the energy on these last legs of these stocks down suggests that the best that you would hope for is a trading range, in which case the first level of resistance in SCCO would come in at about 28.5, 28.75, something like that. And then, of course, we're going to start seeing other stocks of interest, other stops in here, about 31 bucks. But if everything was perfect, we'd see 33.31 on Southern Copper. Talked to Andy about it, and he said something about them actually making money with copper at 80 cents at one point. Maybe he'll bring that up in his discussion with Tom today or on a show tonight. I don't know how much money they made at 80 cents, but they made money, which I guess is probably better than going out of business. But it's interesting. Again, I had some emails during the break. I'm looking at the upper part of this trading range at 1970 to 1990. Above that, and you could really get going. My guess is, though, the lower end of this trading range is what we just tested, which is that 1970 level. If we break that, maybe you could get some movement to the downside. But from what I was looking at the price and volume during the break, I suspect a lot of people thought that they would try to get this thing going to the downside and have failed, at least temporarily. But again, I'm thinking we probably close somewhere up around 1990 at the high end of that, with a lot of people starting to blink that were short this thing at probably 1985. They're not going to be losing a lot of money, but I don't think that they want to go home short looking for another gap up. That probably won't happen. My guess is that we'll probably see 2,000 sometime tomorrow on the S&P cash. And we will probably find a wall, a legion, a army of short sellers thinking that the time to pull the trigger is 2,000 on the S&P cash. Other stocks of interest out here, Tiffany's came out before the bell. I loved that song when it came out. Very good. Anyway, Breakfast at Tiffany's, TIF. Not all that exciting today. Did open lower, kind of got a little bit better. It is off from yesterday and down. But, it could have been a ton worse. Now, you do have a lot of volume. You are going up against 5 million shares. You already have 4 million shares on Tiffany's. But I don't think anybody's surprised. The question was this going to open up a couple bucks down or $10 down? And it opened up a couple bucks down. Volume's probably going to get a little better, but not going to find a lot of Chinese storming the Bastille to get into Tiffany's anytime soon. So I think you can probably say that the upper limits of Tiffany are probably fairly strong, and maybe even see this thing over the next few days or weeks set up the ABC down. If it could get back into that 88, 8.5, 88, maybe 89 area where this thing started to pull down over the next week, maybe a good trader even on the short side on this. But again, a lot of these stocks are going to rip a lot higher. I would put a couple bucks on something like this. Just saying that if I wanted to be short at 89, I might say that I may put 2 more bucks on it and say that I would wait till it got to 91 and just bypass it if it didn't. I would want to be on the high side if I'm short, because they will run these stocks incredibly well at the end of the short squeeze. By hook or crook, they will run stops to the upside during these violent upswings in short squeezes. So be very careful. Other things that I was looking at. Another one, FCX. We'll take a quick look at out here. And let's see, what do we have? You know, a up day and a down trend. This hasn't broken anything yet, but a lot of these commodity stocks haven't. That it is up on a day with the dollar rallying so hard tells you that maybe there's a little oversold in this. Long term, you know, am I talking 2 or 3 weeks? Could this thing rally for a while? I think the answer is yes. You probably would have liked to see this kind of come off the bottom with a little lighter volume and then pick up volume. This high volume off the low pretty much connotes that we are seeing short squeezes. A lot of people that have been short this for a while and seeing 25, 30, 40% of their short position evaporate in one day. And they may probably been short for a while. But, you know, just if you just use even just the standard retracements on a lot of these stocks, you're going to find out that the areas that you probably want to short these at, if you are bearish, are much higher. If I don't see a real good opportunity for FCX, if you get back up to maybe $18, that's where I would want to be short this thing. So that's a ways up there. That's like another $8 higher. Probably good trades to be had on the counter side, even if this is a bear market. What else did I have? Tesla, a lot of discussion of Tesla out here today. The Consumer Reports loves their cars, but they've loved them every single time. Now, one of the things is they don't have to pay for them. And I noticed in the discussion from Consumer Reports, it doesn't say what happens when that $25,000 or $30,000 battery pack goes south. Is that $25,000 battery pack going to be repairable for $2,000 like a car engine? And the answer is no. With a annual price of about $1,200 now for fuel, that $30,000 battery pack seems awful expensive compared to a BMW. Not only are you paying up front for it, but of course you're looking at when these fail, it's the equivalent of taking your engine out and throwing it out. Those batteries can be recycled, but that's going to cost you too. My problem with it is, and always has been with Tesla, is that it continues to be powered by batteries. It can be the most perfect car in the world. It is also one of the most expensive on a mile-driven basis. Now, I'm not going to say short this thing. Mr. Musk has a wonderful ability to go out there and flog his own things. This company is one. Of course, he was flogging Solar City earlier. Was it on Monday or Friday? Monday. And of course, if you want to talk about incestuous, you know who runs Solar City? Would it be his brother-in-law? Mr. Musk is basically building a huge pyramid on the bubble out here. Again, I continue to think that we probably have and will see somewhere between $80 and $40 on this stock in the next 2 or 3 years. Once everybody else and competition comes out, their margins, their so-called margins, I mean, they're showing that they're making 25% on each car. A lot of reports are saying they lose $4,000 on each car. A lot, especially in these new IPOs or recent IPOs, you can do a lot with bookkeeping, but you can only do it so long. And that $5 billion plant to make batteries, even if it makes the batteries 65% the cost that they previously were, you still have to throw. You know, imagine your engine ran for 5 years and you just had to pull your engine out, put a new engine in. You'd say that the people were nuts. And that's where I think the one flaw in electric cars is they're getting better. And it's getting more competitive, but it still is far away, especially with gas prices, with crude, you know, around 40, and a lot of states with gas that hit less than $2 over the last week. incredibly tough long term to get Tesla out of the doghouse for me. In fact, somebody was doing an analysis today, and I can't remember which company it was. I probably should have seen it. Right now, at 100 times forward earnings, this thing would need to be throwing off $2 billion each year in cash. It is not. And so if you ever wonder where my numbers come from, 40 to 80 bucks, it comes from them making 6% margins to 8% margins, just like every other car company has forever. They may be the best company in the world, but guess what? 6 to 8% margins are what BMW makes, what General Motors makes. They will be able to hold higher margins for a while. But just like Apple, eventually the market forces will come in. And if someone can sell a, if you're talking about an $80,000 car with a 25% margin, an $80,000 car, maybe BMW could step in for $65,000. Now, maybe it'll be a 99 out of 100 instead of 102 out of 100 like Tesla. And maybe there'll still be people that say, hey, I want to own a Tesla. It's a status symbol. But eventually, over time, it becomes problematic. Tesla will have to own the market to make these margins ever pay off. I think this is one of the easiest calls I've ever made. Unfortunately, it will also be one of the ones that takes the longest to pay off. So I will take my shots at it from here and there, but not sit on it forever. Got another one up here. I had a couple of good buys yesterday. I had another one was up 6 or 7% yesterday, up another 3 or 4% today. And this one I think is going to get a buyout. So I'm happy for that today. In fact, I'm happy for a lot of things. Anyway, 1972 on the S&P cash, 3.3 billion shares. So we'll see how today comes out. And anyway, it's a nice day. What else do we have out here? Tesla. Of course, a lot of stocks leading the way are in the tech industry. Avago is one of those. This is an Apple supplier. And again, Apple moves, Avago pretty much moves. It does tend to lead Apple for a lot of ways. This thing, they ran it down to $100 on Monday. They got it back up to $127 at the high today. This is where all the fierce resistance will be, because guess what? You've got a congestion zone that ran from the 18th of August all the way back to, the 27th of July. And all those people that had been buying along those days were just dying to get out here today. So look for those congestion zones. Know that it will be problematic. Avago will be riding the PR coattails of Apple. And like I said, probably if you're thinking about these stocks breaking down again, I would wait until the PR blitz Krieg that Apple will have September 9th, releasing their new products. We'll talk about Apple. And one of the things I thought very interesting today that people were pushing that a lot of people do not think about. We'll talk about that when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the Taz Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The Taz Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed Taz proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the Taz Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. 3.3 billion shares volume at a brisk pace out here. Just a little under my trading range of 1970. Couple of points. We'll see how this goes. I suspect that if they don't get any kind of energy really moving, they're going to have a hard time. Of course, tomorrow starts what? We get into fund buying starting tomorrow. We get fund buying also on the 31st, 2nd, and 3rd of the month. That takes us pretty much through next week. Now, Trim Tabs is a company that keeps track of these numbers. Right now, they show $18 billion on the positive. No, excuse me, $19 billion on the positive side for buying next week. So even if we're not going to go a great deal higher, I suspect that they will try to keep this market up and sell to the 401k people, which they probably think of as suckers at the highs. There's no way to give them an even break. But we'll continue on. Other stocks of interest out here today. Oh, we were going to talk about Apple. I saw a lot of people pushing Apple, the PR stooges come on CNBC. I tell you what, when we get into late September, I'm going to be very interested on how Apple trades. They were out in force pushing Apple Pay today, and Samsung Pay, which rolls out at the end of the month, is very interesting because guess what? If you got a new phone that they just released, It works with 98% of the card swipers in America. Apple's about 2% as of today. So why everybody is kind of dodging the whole issue of what's available and where it's available, I think just being ubiquitous is a much bigger part of being accepted. Kind of like Panasonic and Sony in the VCR business. It was just so much cheaper to have one VCR tape. The Betacam just never made it after Panasonic came out with their VHS for one tape. Instead of paying $20 to record at the very beginning, it was about $20 to record a videotape. If you had a Betacam, you were paying about $40 because you had to do two tapes because each one was only an hour long, which was the major fallacy or problem. You couldn't get a movie on Betacam on a single tape. And VHS, you could. In fact, they extended it after a while. You could get, when it first launched, was 2 hours. But I think this being ubiquitous or having that one issue may be the driving force in that Apple will not succeed long term. They have to get everybody every Walmart out there to replace every one of those swipers at the cost of almost $1,000 a piece. The people, especially in retail, that work on very small margins are not real big into that. Other stocks of interest before the end of the day. I wanted to look at DG because I know it came out with earnings. Haven't had a chance to look at it today. I kind of figured that it wouldn't do well. It is down and on volume. It looks like the $70.35 of August 24th is likely at here, more than likely. So you got a couple more bucks down before this thing even finds some kind of bottom. If it breaks the 70.35 from just a couple of days ago, you're back down to 65. Pretty much was one of these stocks that never had any volume, though, as it broke the previous highs that ran from March of this year all the way into the end of April. Just never was any juice, never a sign of strength. Triple popped. It's come back in here. I just never think it was the stock that they really pretended it was on Wall Street. But got a lot of people to buy the highs out there. We will be back tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.